All right, all right. Felt like a long week to me, man. And we only worked 4 days, right? Juneteenth, baby. Gotta love that new holiday. I'll always take a day off, man. Another day the market's closed. I'm all right with it. It's a good holiday, too. I'd rather we call it American Enlightenment Day because we all became enlightened and banned slavery. That's some crazy shit, huh? You think back? Well, that's not too long ago either, right? But hey, I don't know anybody who's been a slave, and I don't know anybody who's owned a slave. I think that's something to think about too. But all right, the end of Juneteenth week, and thank God it's Friday, man. Um, so hey, yo, it's different this time. It's different this time, right? Everybody's worried about inflation. You got the Fed jacking rates, jacking rates, jacking rates. And he's going to slow down demand because of inflation. But the problem is not the demand, the problem is the supply. And jacking rates, all that's doing is blowing up employment, getting people laid off. And I mean, what was it? 3, 4, 5 months ago, people are bitching because the cost of labor was going up and they couldn't find employees, and payroll was going up, and you couldn't. I mean, you couldn't even go to restaurants, which that's reality. I went to one in the spring, and my reservation was contingent on whether they could find staff or not. And this is like a farm resort, and old school, man, old family. They've been running it for years, like that old Catskills concept. And they do a family dinner kind of thing, or family meals, and they serve like one thing. So one night it's southern fried chicken, another night it's turkey, and then you got a steak night, and they got a breaded pork chop night. Oh, forget about it. You better take your statins on that night. It's baked potatoes with sour cream and potato skins, and they just it's all you could eat. They fill up the table, and it's great. We love it. And whenever we're in the mountains and I get my family together, we shoot over there. So I made that reservation, and it was contingent on them finding staff. But ultimately, they found staff, and they always accommodate me. But I digress. So we're worried about that all last month, not last month, but maybe even last quarter. You heard that, and they couldn't find workers, and that was a problem. Now I am finding that not only are they laying off in mass, but I'm hearing and reading that a lot of new job starts, the offers are being rescinded. They're getting rescind letters like days before they start. Before they even start the position, your position's been eliminated, or we're downsizing, we're not hiring freezes all over the place. A lot of young kids coming out of college expecting to start work this summer, their new jobs, and their job offers are being rescinded. Read an article about one woman, single mom, made a move from a job that she found was toxic to a new job. They postponed her start date, one day after another, and then they sent her the rescind letter. And so she's got a kid, she's got bills, didn't anticipate being out of work, and boom, rescind letter. So this is what this interest rate hike is doing. I don't think this is a very good move. I mean, something's got to break, and putting people out of work is not the answer, especially when this is not an issue of overspending. And people are going to slow down their spending, but we're still not going to have product, and things are going to be expensive. Although oil is coming down, considerably. It's on fears of Japan. There's an overabundance out there too. I'm sure there's a shitload of tankers parked offshore that they don't even count in storage, because I think in the oil count they only take into account what's stored below ground and not what's in oil. So they have these huge storage facilities below ground, like big holes. that they fill and store oil there and then pump it out when they need it. So, and I think that's what the stockpile measures. And I believe I heard, I'm not certain of it, if any of you oil experts out there are listening, I'm not certain, but it doesn't count what they drop in tankers offshore. And OPEC seems like they're going to be easing up and letting oil flow. And it's a good idea, too, because they want to take away that Russian market. Um, so so it looks like these guys might get aggressive there, and oil's going to come down. Oil's down to $104 a gallon. I mean, we shouldn't a barrel. We shouldn't be seeing $5 at the pump. These are the oil companies just putting the thumb screws to us and not refining. Um, and really putting it to the politicians because the people bleed and then the politicians take the beating and you know that's what's going on. So things are different, man. It's different. This is not the same type of inflation environment that we normally see, right? So how's that translate, man? Do we? I mean, it would be nice if wage pressure came down a little bit. That would be okay for companies. Profit margins are not getting hit at the moment, so it's not like they can't absorb the cost. But it would be good to see inflation peak. And I feel if you see oil prices rolling over right now, housing slowing down, I think it's peaked. It's peaked. It just takes a while to come out in the reports. I mean, really, what do we look at over the past week or two? We looked at last month's numbers. So could be the turning point, man. Could be the turning point. But I guess we'll have to keep our eyes open, eh? So what are we looking at here? Um, so we're looking at the ES, and here's the 240, and I'm really watching this bull flag right here, and a high of 38, 34, 25, and we're pretty much popping through it. 38, 34. Yeah, we're at 38.29 right now, so we should break through that. And I'm expecting it's going to break through at about 9:30, and the 240 rolls to the next bar at 9 o'clock. So I'm going to keep an eye on that. I'll probably take that trade today, and that will be my Friday stake money. Um, but really, since the 17th, we've been on this slow grind back up and retracing that move we made. And I don't really have any targets. I never really looked at any targets. Really, on this bounce, I mean, you could just Fibonacci this. Let's see what a Fibonacci looks like, actually. I am curious. It's my snap going. There we go. Um, so I guess 39.21 would be fair. And we got some gaps to attract it. Yeah, I like the way that looks, man. And that's on the futures. I mean, let's see how that translates to the S&P. Oh, look at all the drawing on that thing. What the hell is Dave doing? Getting a new career in computer graphics. So we're looking at 3,900 too, and yeah, we got that first gap right there. That's interesting. I mean, we have a couple of gaps on the S&P daily. I mean, we don't see those gaps on the futures because it trades through the evening, but we see those gaps on the daily, and they're quite interesting. Really, nothing's happening until we break 4,200. Nothing's changed. I still got that target of that 3310. We may clean up all those gaps before we head back down there. I mean, this is all like way out speculation. So what we're going to watch today is, look, we've got that one green finger. As long as we stay up today, which we're up about 30 points right now. But if we close down and that baby goes red, that's usually a negative sign for us. That's like that. It's I call it the bulls giving us the finger because they're backing off. Like, fuck you, take it down. So here's a red finger, right? You see right where my mark is. Here's a red finger, and then shortly after that, we get a, well, no, that didn't really work right there. It's not 100%. It's like any other trading vehicle. It's an indication, and you couple that with other factors, and it gives you an idea of what the market's going to do. Um, so anyway, that's what the market looks like. There's not really not that much going on. Not that much going on. I mean, a break of today's high. We've already done it. Yesterday's high. We've already broken that. So, and then we have this gap over here. I mean, a good trend reversal pattern would be if we came down today, tomorrow, a little bit next week, close that gap. Made that trend reversal pattern on the Mac Daddy, and then broke the high, and that would be cool. But we are bearish. There's a high, there's a lower low, lower high, lower low. That's a little consolidation, higher high, and then we go into this lower low, lower high, lower low, lower high, lower low, lower high, lower low. There's a little consolidation, and we break down. That's interesting that pattern develops. We get the consolidation breakdown, retrace low, high, high, consolidation breakdown. So I guess these are the attempts and fails. It's not good to think out loud while I'm on camera or making a recording. But these are the things I'm looking at. I'm also looking at the trend of this. I don't know if you can see these parallels. I've got 3 parallels in here. And here's one that runs along. This is actually the one. Let's get rid of this trend line. Everything's just getting too hard to see in here. Get rid of the fib. So this is the trend line that goes back 10 years. And had we not had that ridiculous run up after the pandemic, this is where we should be trading right now if we stuck to that trend line. And I'm wondering if it's going to hold that support and blow up my 3310 bottom. I mean, we're only talking 500 points. So, we get that edgy market, and it's a matter of days to take that out. So I'm in turmoil. I'm watching this. Well, you know what? This could be a good resistance area and good value and consistent. Actually, let me reduce that. So you could see this line right here, how we just favored that pandemic lockdown and then this crazy fucking return. And this is all the meme shit and all the bozos jumping in the market. So if we took this outlier out, this is the trend we should have followed right here. I mean, just going back, you could even say this one here, but yeah, this is it. The middle one is the trend we should have followed, taking out the outlier. So that would put a lot of value in a trend reversal pattern here. If we could see one, and if you looked at my other videos, a trend reversal pattern would be like this here. You see where we're making this low and there's a low, and then we make this aggressive low, but the momentum's making a higher low. So that's a divergence. That's a good trend reversal pattern. And then, so that we could look for something here. Another good trend reversal pattern would be, well, this is a divergence. Also, I want to show you just trend reversal without a divergence. So you could see this low here. Here's a low. Here's a higher low, and the momentum is doing the same thing. So really, the entry is on this break. The aggressive entry would be on that hammer. That's the trend reversal pattern I'm looking for, although I wouldn't mind a divergence. A divergence would be fine. But the reason I'm looking for that is when you get a trend reversal pattern around a logical support or resistance on the downside, then that adds a lot of credence to that pattern. There's a good rationale for that pattern, for that trend reversal pattern. Just like you look at supports and resistance for run-on stops, they make these patterns. They increase the quality of the pattern, the probability of the pattern. So that's what I'm gonna look for around here. I mean, I still got that 33.10 stop, but when things are green, you feel rather optimistic, and when they're red, you get very pessimistic. So you could find your lows, your probable lows. When you're green, you see the possibility of the turnaround. The name of the game is to play them with limited risk or good risk management, and just make sure you're in the right move. It's not that everybody's sitting out there saying this is the right move. They're saying this could be the move. I'll take my shot and limit my risk. So, so anyway, that's what we're watching. That's what we're keeping an eye on it. And when you see these gaps in it, it just makes you uncomfortable. So we got a gap right here, although it looks like it closed it with that bar. But there's a fairly good gap right here. So that would lead me to believe that we're going to close that gap, create that trend reversal, and then pop. And who knows? Maybe, maybe this is the end of the downtrend. This could put us into a consolidation. Doesn't necessarily have to start running up. But I think if we go into we won't go. We may just start trending up over here, and really, if we follow this line, I mean, it'll be like September before we should really start an upward trend, maybe consolidate into September and then begin the upward trend. So we shall see, we shall see, we shall see. There might be one or two more aggressive days where the Fed starts looking a little more dovish because we're getting the response, or we're getting indications of a slowing or peaking inflation. But now we have to fear destruction. I mean, like I said, the Fed is trying to show that they're doing something, but they're not doing the right thing. So is it going to be destructive to our economy? That's what's important. And then we got the idiot Putin, and we got China, and all these bozos just gunking up the works. So these are my thoughts, man. This is what I'm looking at. These are my thoughts. Let's take a quick look at interest rates. And yeah, those babies are floating down. I still think I'm feeling. Yeah, I'm feeling that 27 again. I'm still looking for that 24 mark, to tell you the truth, that 24.50 mark. I think by the end of the summer, we're going to be back down there. So go long bonds, baby. And people are buying bonds. People are moving into government bonds because corporate bonds are taking a beat. They're going off at a discount now. So, yeah, I think I'm feeling that. The VIX down below 30 again, and what's it look like? It's probably going to come down to about 21. Not overnight, but I think that's how everything's feeling to me, man. I think all this rhetoric nonsense and hoopla is easing out of the market, and we're going to head back into something a little more orderly, which will be cool because I could fire up those income trade portfolios again. BTC, Bitcoin. Yeah, I know it's taken a beating. And I don't think it's a lookout below situation. We closed up a bunch of gaps. I mean, it could come down into this area if there's no support in it. I mean, the momentum right now is rather negative. We're going to need to see that turn around a little bit. I don't think everybody's bailing on it, though. I had another guy leave a comment saying it was like gold. Huh? It's not like gold, man. Gold is a tangible asset. Actually, a valuable commodity in electronics and space and things like that. You know, Bitcoin is a concept, two different things. I mean, but yet, I have heard all the stories. Somebody just told me that, it correlates with the S&P. It moves with the S&P. Last year, I had a guy arguing that it was a hedge against the S&P, which, that's what it was trading. The S&P was going up, Bitcoin was going down, S&P was going down, Bitcoin was going up. But there's no real correlation. If you do it over time, you do the homework, you'll see there's no correlation between the two. There are trends, and sometimes it trends with the S&P, sometimes it trends against the S&P, but no real correlation. So, and again, remember, it's an investment vehicle. It's a trading vehicle. In my view, it's not an investment vehicle. So it's not some place to put your money or your retirement. But, take advantage of it. Take a little piece. But I don't see anything. I don't see any moves. I'm not looking at a day trade on it. It's actually, in a choppy consolidating pattern. And it's been that way for quite some time. So it's really not good trading right now. So actually, if you used Ichimoto Cloud, whenever you're in the cloud, that's where you want to stay away from short-term trades, because you just get chopped up. And you can see it right here. I mean, it's just going back and forth in the cloud. It's the breakouts that you want to look for. So you want to look for good support and resistance, and you want to play those breakouts until you get out of that cloud. And then you could look for your flags and shit like that. But right now, I would stay chill. Chill, chill, chill. You could be bullish above that line right there. Breaking that trend line, I'd look for a short. I'm just hanging out with everybody. All right. What else could I look at? AMC, don't want to do it. You guys aren't interested in the stocks that I trade. And nobody's asking me to look at anything for them. And my promoter sucks. All right. So do me a favor. Subscribe, hit the bell, hit the like. Everybody be calm and cool, and have a great weekend.